Okay, so we're going to do something kind of fun today. We're going to make the daily bias boot camp video like right now on Zoom. So this is with my Discord before pre-market. Market opens in around 17 minutes. We're going to make our daily bias video like explaining my daily bias on these pairs. So we're getting recorded on here, and this is also live, like market analysis. And then you'll also see, and then we can also like go over how the daily bias played out with the live trade, or sorry, the trade recap afterwards. So I thought this was a fun idea. Let's get into it because we don't have much time. Okay, so I know I didn't have the chart in the last video. I'm very sorry. I messed up. All right. I know. I don't know how it happened. Okay, but anyways, you guys heard me explaining it. We'll explain it one more time with the charts this time. Okay, so what I like to do for daily bias is we start off on the weekly time frame. Figure out, okay, where's our overall direction? Right, we can even use a line chart. Okay, the S&P, it's been moving up. This is like honestly very surprising to me. The fact that we're breaking structure back to the upside, very, very surprising to me. The fact that we're about to break structure on the monthly time frame to the upside, okay, like this has to be the next. Like I'm not convinced that the S&P. I'm not convinced whatsoever that the S&P 500 is bullish. So my next draw on liquidity is up here. Okay, we also have a draw right here. Okay, but we broke monthly structure to the upside. Unless today closes below this low, this high, and I don't think that's going to happen. We have news today that comes out. In 30 minutes in a market open. That won't do shit though. A candle's not going to come. No candle on the S&P is going to go down to like 3% in a day with no like major high impact news. It's just not going to happen. So I'm very, I'm trying to figure out what the market makers are doing with this because I've read the fundamentals. The fundamentals doesn't look good. Anyways, we're getting off track. We're getting off track from the daily bias. Anyways, we look at the weekly time frame. We see the overall direction. Overall direction, bullish. Then we head over to the daily time frame, right? Because we are trying to base our trades based off of daily candles. Okay, so if we can understand the daily market structure, if we can understand the daily trend, then we'll know what our daily bias is, where we would like ideally want to take a trade, right? If we're bullish, but we're in a retracement on the daily, are we going to try and take a trade off of off a retracement, or would we want to take the extension because the extension is always way larger and way bigger than the retracement, right? It's higher highs and higher lows when in an uptrend, right? The highs go so much farther than these little retracements down. So ideally you're trying to catch longs in a uptrend, right? So that's literally all we do. Okay, we go to the daily time frame. We broke structure to the downside right here, and this is why I took shorts yesterday because we swept daily liquidity up here, although we'll get into this later. We didn't have confirmation on lower time frames, and that's where I fucked up. Oops. And that's where I fucked up. Okay? But we'll get into that later. But anyways, we go onto the daily time frame, figure out our daily bias. We just recently closed back above here on the daily time frame. We broke structure back to the upside on the daily. So we're bullish again on the S&P 500. And as much as and that's what I was doing yesterday, as much as I would like to force my bias on the market and say, oh, well, like I think like the fundamentals are saying like we can't do that. So we have to play off of what our daily bias is saying. We can't just do what we can't take a trade based off of what we want market to do. We have to take a trade based off of what market gives us. Okay, and right now it's telling us bullish market structure. Let's go over to real talk. Anyways, all right. So, all right. I don't know. I have no explanation for that. Anyways, Yeah, okay, so I'm sorry. Anyways, we broke structure to the downside. I forgot that was there. Anyways, we broke structure to the downside on the daily time frame on GU. So what are we right now? We're bearish. Weekly, we're bullish, right? We have this. This is technically a weekly order block. Why? We swept this liquidity. Boom, rally higher. However, on the daily, where we're trying to guess where market's going to go, we're still bearish. So until we flip bullish on the daily, then I'll be able to flip bullish and continue on the weekly trend, right? The weekly just gives us an overview. And this is when we can get into the smaller time frames. Okay, so yes, we are rallying higher on the daily, right? We are retracing on the daily, which probably means we broke structure on the 4 hour. But this is when it's prime time to try and catch a short. And this is where we can use our building blocks. Fair value gap. What is this? This is the order block, right? What is this? Boom, sweep of liquidity, boom, big break of structure to the downside. This looks like a great trade to take if we can get up in here and show me some sort of bearish confirmation off of this, right? On like the 15 minute. If we get a break of structure on the 15 minute, I'm ready to go. And I'm ready to target even lower. I'm ready to target this is like an order block. Even though it already slightly got tapped into, I wouldn't be surprised if we pushed even further down in there to collect more orders. Because look at this. Boom. Big rip to the downside. Big liquidity sweep down, filling this imbalance, and then big rally right after that. Okay, so again, what's our daily time frame telling us? Bearish. So what are we looking for? What are we trying to find setups on these higher time frames first, right? Boom, imbalance, order block. Then what do? We scale down even lower. And we say, okay, what are we looking for now? We're looking for liquidity sweeps on the 15 minute. We're looking for break of structure on the 15 minute and then an order block entry on the 15 minute, scale down to the 5 minute and then get a break of structure, and then that's our sniper entry. We go from finding the daily trend, downtrend, we're bearish, to finding a building block area of high confluence within our bias, bearish fair value gap, bearish order block, to then scaling lower to finding those same building block entries, but on our lower time frame, because we're in this whole price zone is a high confluence price zone to go short on the 4 hour. So how can we get the sniper fucking entry? Using the shit that we just learned. Okay? We do that by scaling into a lower time frame and using more confluences. Again, right? We're within a building block, and then we're using more building blocks on a lower time frame so we can get that good entry, so we can target high time frame take profits. And after this daily bias series, we'll go into setting take profits, and then we'll go into setting stop losses, because I get a lot of questions on that, and we'll get to it. Okay, so boom, we have the order block right here. Okay, and then we have, let me get rid of this because this was just showing the break of structure, and then we have this imbalance, which has pretty much filled all the way. Let's do the same thing on gold now. Gold weekly, what is it? Bearish, cool. Gold daily, what is it? Bearish, awesome. What are we doing right now? We're retracing on the daily, even better. What are our retracement tools? Fair value gap, equilibrium. Okay, how can we find equilibrium? Boom. Perfect, we're not yet in a discount. What else do we see? Fair value gap right here, within a discount. See, we're putting all this shit together now. Scale, and then look what I just did. Scale down into a lower time frame. Boom. Imbalance within here. Liquidity resting above these highs. What is market likely going to do? Where is market likely going to draw towards? Probably going to draw towards these highs, probably going to fill this imbalance. And then what do we do when these price points get hit? Scale down to an even lower time frame. Okay. Wait for this liquidity to get swept. Wait for this imbalance to get filled. Within here, okay, and then we use our building blocks on a lower time frame. Liquidity sweep, break of structure on the 15 minute. And then we're taking an hourly and a 4 hour type of trade, but we're getting good fucking entries. I'm not going to trade GJ just because it's been trading pretty sloppily. But that's how you find daily bias. And you guys will see the trade that we end up taking today. Market opens in like 7 minutes. You guys will see the trade that we end up taking today. And it will be off of one of these daily biases. I'm bearish bias on gold. Bearish bias on GU. Ideally, we find a short trade on GU. To fill this and then fall. And ideally, we find a long on the S&P. Let's go over the smaller time frame on the S&P. We have lows right here, 1 hour lows that could be taken out as liquidity. Let's go into the 15-minute. We have this whole move down is technically an order block. You're probably saying why? It swept this liquidity without closing below it, caused a huge rally up. This is a high confluence area along with, boom, imbalance. Wait for this to get filled. Maybe it wicks past these lows. Maybe it just closes below these lows, fills this imbalance, and then wants to go higher. Okay, we're rallying like none other on the S&P, which is very interesting to me. Okay, we have liquidity here, order block here, imbalance here. All of these are high confluence areas for us to take trades off of. Okay, and then when it comes into these high confluence areas, what do? We scale down even more. Okay, I like to take trades on Forex on like the 15 and the 5 minute. On the S&P, you know, it's like the 5 minute and the 1 minute. Okay, what else do we have if it goes lower? This is technically an order block. You're probably saying why? Swept liquidity, caused a rally higher. Right? These are great price points. Also, this whole thing within here, I'm not even going to highlight it because it would be too many boxes, but this whole thing within here, imbalance. This is calling for market to fall right when market opens. Come into one of these price points, whether it takes out liquidity, break of structure to the upside, order block entry, fair value gap entry. Whether it comes into this imbalance, right? Break of structure on the 5 minute, order block entry with a break of structure on the 1 minute, boom, long. Whether it pushes all the way down here into this imbalance, break of structure, you know, like, it doesn't matter where market goes, we just need to adapt to it, right? We mark out all of these little building blocks. This is a great video. I'm glad that we're doing this. We mark out all of these building blocks that are in line with our daily bias, right? What is our daily bias? Bullish, cool. What are we looking for? Longs. Okay, we use our building blocks. What building blocks can we map out that are in line with our bias that makes sense? The S&P looks great for longs today. Why? Because the hourly is saying the hourly's in an uptrend, the 4 hours in an uptrend, the daily's in an uptrend, the weekly's in an uptrend, 15 minutes in an uptrend. What are we looking for? These price points to get filled, break of structure to the upside on lower time frame for confirmation, enter. That's how you find daily bias, and that's how you execute using daily bias. So, with that being said, I think we'll wrap up this YouTube video. I'll try and get this posted while we're trading. And then by that time, hopefully the video's uploaded on my shitty ass Wi-Fi. Who knows? Hopefully by then the YouTube videos are uploaded, and then we can upload the trade recap and go over what trade we took. It's either going to be a GU short, which I'm going to need a lot more time to develop because I want at least a 15-minute break of structure because we're bullish on the hourly and bullish on the 4 hour, even though our daily bias is short. Right? Ideally, we're getting a 15-minute break of structure to cause, you know, some sort of a move down. You know, so that's what I'm looking for on GU. I think longs on the S&P will be money. And I would love to take shorts on gold, but I don't know if it'll come all the way up here to give me that. And, right, like, again, we already explained this. Liquidity, imbalance, discounted price, everything above this 50% mark, money. All right, so that being said, I'll see you guys in like, I don't know, 2 or 3 hours for when I upload the trade recap video. Happy and safe trading. Don't be dumb. Trade after news comes out in 30 minutes. Okay, be safe. Peace.